Hey seniors, nobody wants to hear this, but the habits that actually build wealth are boring. They're not exciting, they don't make good content, and they're definitely not going viral anywhere. But after years working in finance and then building my own financial life from scratch, these are the 9 habits I keep coming back to. The ones that quietly move the needle more than anything flashy ever did. Let's get into it. Most people do this backwards. They look for a reason to say no to a purchase. I flipped it entirely. I now require a compelling reason to say yes. New subscription, spontaneous purchase, an invite to something that costs money. The default answer is no, unless there's a genuinely strong case to change it. And I don't mean you become miserable and never spend on anything. I mean you stop letting spending be the path of least resistance. Because here's what most people don't realize. A huge amount of financial leakage doesn't come from big decisions. It comes from dozens of small, unconsidered ones. The subscription you signed up for and forgot about. The dinner you said yes to out of social pressure. The thing you bought because it was on sale, not because you actually needed it. The default no catches all of that before it catches you. Saving whatever's left at the end of the month doesn't work. And it's not a willpower problem. It's a system problem. There is never anything left because lifestyle naturally expands to fill whatever's available. That's just how it works. The fix is straightforward. The day your paycheck hits, a fixed amount moves automatically into savings, into investments, out of your day-to-day account, gone before you even process it. Your lifestyle then adapts to whatever remains, and you stop relying on discipline to make it happen. This is the single most effective financial habit I've ever seen consistently work across different income levels. It doesn't matter how much you earn if the system isn't set up to capture some of it first. Automate it. Remove the decision entirely. The people who wait to save at the end of the month are the same people who never have anything saved. Impulse purchases are driven by dopamine, not logic. And the fix isn't more willpower, it's time. 24 hours before anything minor, 7 days for mid-range purchases, 30 days before anything significant. That's the rule. Most of the time, the urge disappears completely before the window closes. The item that felt urgent on a Tuesday feels completely unnecessary by the following week. And if you still want it after 30 days, if you're still thinking about it, still researching it, still convinced it's worth it, then it probably wasn't impulse spending in the first place. Urgency in spending is almost always manufactured by the retailer, by the algorithm, by social pressure. Adding time dismantles all of it. Everyone's first instinct when trying to save money is to cut the small daily stuff. The coffee, the lunch out, the subscriptions you actually use. And those things matter at the margin, but they're not where the real money is hiding. The real money is in your recurring fixed costs. The gym membership you signed up for in January and haven't used since March. The 3 streaming services running simultaneously. The insurance policy you've had for 5 years without ever shopping around. The utility provider you've never switched from because it's never felt urgent enough. Cutting or renegotiating one of those saves you money every single month automatically, without any ongoing effort or sacrifice. That's a fundamentally different return than skipping a coffee. Audit those fixed costs once a year, minimum. It takes a couple of hours and it pays for itself every month afterwards. Zero-based budgeting sounds complicated. It isn't. Before the month starts, every dollar gets assigned a purpose. Needs, wants, future. Each category has a number. And when that number runs out, spending in that category stops. You don't quietly shift funds around to cover it. You don't tell yourself you'll make it up next month. The category is done. This isn't about restriction. It's about intention. The difference between someone who's broke at the end of every month and someone who's building wealth is usually not income. It's whether their money has a plan or not. Most people react to their finances all month. This habit puts you in front of it. This one is genuinely the least glamorous thing on this list. Car servicing, appliance upkeep, fixing the small thing before it becomes the expensive thing. Replacing the part that's wearing down instead of waiting for the whole system to fail. But the math is undeniable. Maintenance costs a fraction of replacement every single time. The people who skip the routine small expenses are consistently the ones facing large, unexpected ones. The ones draining their emergency fund, going into debt, feeling like something always comes up, nothing always comes up, neglect always catches up. Those are 2 very different things. And the second one is completely within your control. Most people avoid checking their accounts because it feels stressful. But the avoidance is exactly what creates the stress, not the numbers themselves. When you don't look, the unknown fills in with anxiety. When you do look regularly, the numbers become neutral, just data, just information. And when money is just information, you make dramatically better decisions with it. You stop reacting emotionally to your balance and start thinking strategically about it. You catch problems early instead of discovering them at the worst possible moment. Once a week or once a month, pick a cadence and stick to it. Treat it like a meeting you don't cancel. The people who have the most peace around money aren't the ones with the most of it. They're the ones who look at it consistently enough that it stops scaring them. Not a course, not a certification, not a finance degree. Just one concept, one article, one video, applied consistently, week after week, year after year. That compounds, slowly at first, and then in ways that are hard to fully measure. You stop falling into expensive traps because you recognize them before you're in them. You understand how interest actually works. You know the difference between a Roth and a traditional IRA. You understand what your tax bracket actually means and what you can do about it. Financial literacy isn't taught in school. Most people are navigating money completely blind and paying for it in ways they can't even trace back to the source. One small thing a week changes that over time. It's one of the highest return investments you can make. This is the one that ties everything together, and the one most people are least willing to admit applies to them. A significant portion of what most people spend money on is really just signaling, buying things to communicate status, to match what people around them have, to look a certain way online or in their social circle. And that spending never stops because the goalpost never stops moving. There is no finish line in the status game. Every upgrade just resets the baseline. Real wealth is built in the gap between what you earn and what you spend. And that gap widens fast once you stop spending for an audience. Not because you become cheap, but because you get intentional about what actually improves your life versus what just looks like it does. Morgan Housel put it perfectly. Wealth is what you don't see. It's the car not bought, the upgrade declined, the lifestyle inflation resisted. The money you didn't spend on the thing nobody needed to see, that's the money sitting in an index fund compounding quietly. That's what actually builds freedom. None of these habits are exciting. That's exactly the point. Wealth isn't built through the moves people talk about. It's built through the ones nobody notices, the boring decisions made consistently over a long period of time,